what I shared with my team in terms of entries. All right, good. So, first of all, I wanted to say that during the first week of every month, you would notice that Bounceback doesn't send out much trades. I know we've been having a number of persons saying, Coach, why Bounceback is so quiet, blah, blah, blah. And the whole idea of that is during the first week, you're going to have a lot of volatility happening. You're going to have a lot of news spikes, etc. So it would be advised that you stay out of the trade, right? So usually after Wednesday, I don't trade anymore. Obviously, if you know how to trade the news, the NFP, and so on, then you can take that risk. But for beginners, if you don't understand trading, you don't understand, the demand and supply zones, etc., to be able to gauge whether or not the trade is going to go up and buy or sell during that spike, then I will advise you to trade after Wednesday. Good. So I'm going to focus today a lot more on the Bounceback website rather than on TradingView for more or less entries, right? Today I want to really get entries going. Let me just have a look at something quick. And one thing I wanted to mention is that, yes, we use Stevenson Lindor's strategy. However, if you guys had to click on Lex Wave strategy, he has a very important moving average here that I actually show my team to use for entries, and that's the 9 moving average, right? So you see EMA 9. I'm actually going to go through it a bit on my TradingView to show you what I use, or how I use the 9 moving average to get into my trades, right? So let's go back to Stevenson for now. And on this one, we're looking at selling Euro CHF around 1.12516. So you guys should know the routine by now in terms of looking to see where this entry price is. So 12516, right? And it's saying to sell Euro CHF around that point, right? Now, dropping 2 time frames down, we're going to the 15-minute time frame, and we're going to identify, if we're selling this trade, we need to identify the uptrend, right? So I want you guys to always try to be sure of understanding your uptrends or understanding where you should draw your trend lines, because I still see some persons are struggling to understand where they should draw their trend line. For me, this is me identifying the uptrend. What do I have here? The trade came up and it gave me a mountain top. And I often tell persons to look for a mountain top. When you're looking for an uptrend, make sure that you look for your mountain tops and then your valleys. So obviously this valley is not so deep, but you can see how it comes down into a valley, right? So you have the mountain top over here, and then you have the valley, right? Always looks the opposite than the mountain top when it comes to an uptrend. And in this case, what you would have had is you would have had an uptrend that pulled you away from the trend line, and then you would have had a flag. So sorry, you had an impulse move pulling you away from the trend line, and then you would have had a flag that brought you back to retest the trend, right? Now, as you can see, the trade is not quite ready yet for the sell, right? It's not quite ready yet for the sell. But what I'm going to do is we're going to take this over to TradingView now, and I'm going to show you how my team and we utilize Bounceback, and how, we look for triple confirmations, etc., in terms of getting into and the bounce back trades. So let's go, and we're gonna drop your CHF boxing in price from the monthly time frame. So I'm gonna do it with you guys now. Good. So remember, I was mentioning, you know, to really get a good idea of where the bounce back trades are heading, it would be really great if you could come over to TradingView and actually drop your charts. Yes, Bounceback is a phenomenal tool. I recommend all persons to use it. However, try not to get too lazy when it comes to the trading. I know that Bounceback could cause persons to get lazy, where they just buy and sell, or they just put up losing money on the Bounceback website and just set a call alert and move on. You know, we wanna use this educational platform because we know that IML is an educational platform to help us all become master traders, right? At some point in our own way. And we want to be able to use it to, you know, to more or less become better traders so that we can identify where we're heading in these trades long term, etc. So guys, let me just remind you, please do not be too lazy when it comes to using Bounceback. Like I said, if you had to use Sundays or even Stevenson Linder call on a Sunday to drop all of your charts, all of your peers like he does, right? When a Bounceback trade then comes out, it could be actually a double confirmation for you in terms of saying, okay, well, I already had an idea of Euro CHF selling, you know, and Bounceback just came out and confirmed that that the trade is going to sell. And I can tell you that if you have more than one person telling you that a trade is going to sell, is a phenomenal feeling, because it allows you to see that your analysis is more or less right. So we're boxing in price so that we can basically tell price, wherever you go, I'm going to follow you, right? So if you're going to push up, I am going to take you on the way up. Or if you're going to push down, I'm going to take you on the way down, right? So all we're doing is that we're identifying the latest uptrends and downtrends in our boxing in, right? That's all we're doing. Okay, so some persons might come from this perspective now on the weekly time frame and say, okay, well, given that price never reached my monthly trend line, let me get a new trend line, what I call an inner trend line, to get the latest downtrend here on my weekly time frame, right? So coming in now to the daily, and we look to see if we can identify any new trends based on what I can see here. We pretty much have the trends here from the daily perspective. So we're going to come in now on the 4-hour time frame. Now, 4-hour time frame, we could see a nut trend here happening. So you just want to make sure that you're getting that. Make sure that you've gotten that, because when you identify this uptrend, a couple of things can happen, right? From here, you can look for the trade to go back to the trend line, right? Before it continues up, right? So as you can see here, we have an impulse move to the upside, right? And some of you guys should know how it goes: impulse, correction, continuation, right? So impulse move to the upside. We now look for a correction. So you can look for a bullish corrective move here. So a bullish flag before we continue up to the upside. Now, if you have your notepads with you, and one thing that I go through in my teams in terms of understanding if a trade is going to break or continue up is understanding how many touches of the trend line you need before the trend line breaks, right? So you need 2 touches to activate a trend line. So you need 2 touches to activate a trend line, You need 3 touches to confirm the trend line, right? And you look for a break between the 4th and the 5th touch, right? So I'll repeat that again. You need 2 touches to activate a trend line, right? So 2 touches. So in this case, you can see here. So you can see that I have 1 touch here and I have another touch here. So you need 2 touches to activate a trend line, 3 touches to confirm the trend line, and on the 4th or 5th touch, look for it to break. So why we say 4th or 5th, majority of the times on the 4th touch, you will get a break. Sometimes it tends to bounce, but not for a long period of time, you know, just more or less short term before it comes back down and breaks on the 5th, right? So if you didn't get the break on the 4th, just be a little patient, more than likely you will get it on the 5th, right? So 2 touches to activate the trend line, 3 to confirm, 4 and 5, look for it to break. So you guys should have that in your notepads now. So analyzing this and knowing what Bounceback has also told me in terms of selling the trade, right? Analyzing this, I am looking for this to flag back to my trend line based on me identifying on a higher time frame the uptrend, right? And you can see here, so we had an impulse move. We have, we had an impulse move. We had a flag. We had another impulse move. We had a flag. So what we're looking for now, another impulse move. We have the impulse move here. So we're just waiting for the flag before we continue up, right? So something like this, you wouldn't look for the trade to actually break our trend line as yet. We only have 2 touches, not looking for this to do, you know, a huge break here, looking for it to reject around this point before we push up. So this is how you should be using Bounceback to identify what it is that Bounceback is really seeing. What is Bounceback seeing, and how many pips can I look to get based on what Bounceback is telling me to do, right? So if I have to do a pip count from, let's say where we are now, just about where we are, to back to that trend line, you probably could aim for about 20 pips. All right, so as you know, my comfortable number is 15 pips, just to be on the safe side. So in a trade like this, I'll be aiming for 15 pips back to the trend line, which will be the flag on the 4-hour time frame. But in our case, will be the sell move that Bounceback would have called on the 1-hour time frame. All right, so all it takes is for you to just do a little work, just a little analysis to identify what the trade is actually telling you, so that you can then gauge how many pips you want to aim for in this trade. All right. So, and obviously because it would have given you that idea in terms of touches, then that should work. That should definitely work for you. So, so we already know Bounceback called a sell. We've identified our uptrend on the Bounceback, but let's identify the uptrend here. So coming from here, same trend line that we draw on Bounceback. This is what we're using here. So now, what do we want to see? Let me get the arrow. We would like to see price to move from where it is now, come down to our trend line. Probably would do a slight bounce, right? Back up to here, and then make our move down to the trend line, to the other trend line. That would give us a, we could aim for, as I say, we could aim for, you know, 15 pips. You could potentially get more, but what you want to wait for is, you can see price is still pushing up. You want to wait for price to actually break this trend line, which was the uptrend that we identified, right? So as I say, just a little analysis. Try not to be too lazy, because if you actually do the analysis, right? If you actually do the analysis, you would then realize, okay, this trade is not ready as yet, or this trade is ready, etc. Right? And that's what you want to identify. You want to identify the trade being ready or not. And as you can see right now, this trade is not ready because we actually need a break of this trend line. So you wouldn't want to sell too early. Right? Now, guys, the reason to why I want you to start using TradingView when Bounceback sends you out trades is because, okay, Bounceback sends you a trade, and you know, my business partner Kamar, he mentioned that with the Bounceback trades, when they come to the trend line, like here, for example, if you notice that you would have drawn a trend line and you're waiting for you're waiting for it to break so you could get into the trade, as Bounceback would identify, and you notice that it hasn't break the actual trend line, but it did a rejection, he often says that you can actually trade it in the opposite direction. I would only advise too that if you have the skill of understanding that, then you can do it. Don't just risk it. But based on our research, every time we drop a trade on Bounceback and we notice that it actually rejects at the trend line. So it actually rejects on the trend line, right? Rather than breaking it, then more or less we actually see it going in the other direction. So persons are able to catch the trade in the other direction first before it comes down. That's just something that we see. You know, it's nothing bad about the product, etc. The product is fantastic. All we're seeing is that, you know, for those who are, you know, have the skill, they'll be able to say, okay, well, Bounceback rejected at my trend line, so I could actually catch the trade in the opposite direction first before it comes back down. But obviously, for beginners, that's quite risky, so I wouldn't advise you to. But for more intermediate and advanced persons, you could actually look at that. Maybe you could look at it breaking, waiting for it to break the last high. So, for example, if you had to draw a type of trend line here, right? Waiting for it to break this last high and then getting in for a slight buy, that's something that you can look at as well in terms of maximizing the pips on the trade, right? So that's just an idea, because I know the master traders, etc., would have noticed that sometimes Bounceback tends to go in the opposite direction first before the trade is actually ready for us to get in, etc. So that's just for those master traders or intermediate traders that are on this call. That could be a potential idea for you. If you see the rejection here on the trend line, you can draw a trend line identifying your mountain top in this case, and wait for the trade to actually break that mountain top with a solid body candle, and you could probably aim to catch a couple of pips in the opposite direction. And where would you want to get out? You would get out based on looking left. So you still need to look left. You need to look left and identify previous valleys. So for example, anywhere in between here. So if you look left here, so anywhere from here to here would be where I would want to exit my trade. Right? So anywhere around here. So now we are actually getting into that resistance zone. We're actually now starting to get into that resistance zone out here. So this is just to show you, if you guys wanted to really maximize on the trade, you can actually do that. But we already know the overall direction that we're looking for, where this trade is concerned. So you guys can actually get in when it breaks here. I wouldn't take the up move now because it's already happened. So you could actually get in when it breaks here, and we can take about 15-20 pips down to the trend line. Now, the last thing I'm going to do before I close off this call is show you these moving averages that I was talking about with LETs. So the beauty about doing this on TradingView is that obviously when you're doing it on the Bounceback website, you're more or less restricted to the indicators that they have on their preloaded for you. But on TradingView, you can add additional indicators for your confirmation. And one thing that I would have explained to the team, right, is using the 5 and the 9 exponential, moving average exponential. So all you need to do is go to indicators and you're going to type in moving average, and you're going to see it there, moving average exponential, right? All you need to do is click on it twice, and then it's going to be over here on the top left hand corner, and go to settings. And what I actually do is go to settings, go to inputs, right? And change the length to 9 and the source to high, low, close 3, right? So HLC 3, right? So this is what I use. So input is 9, source is HLC 3, right? And with your style, you could just come and change it to any color you want, and then you can actually thicken the line so you could see it on your graph as well. So that's for the 9 moving average. And then for the 5 moving average, same thing, where you have the length is 5 and the source as HLC3, so high, low, close 3, right? So that's what you would have there for that. And again, inputs, I change it to be a different color so I could identify which one is my 5 and which one is my 9, and as well as I thicken it as well. Now, a good example of using these moving averages, and it's so handy for me, is that when this trade comes down to my trend line and I'm looking for it to break, right? So I'm looking for it to break because I want to participate in this sell that bounce back as called. Notice, so my 5 moving average is a black line, right? And my 9 moving average is the orange line. Now, when this comes down to my trend line, what happens with my moving averages? They cross. All right, so they actually cross and give me the indication that this trade is going to buy. So notice, when I get the cross here, what happens? The trade continues up. So let's look here. The trade continues up for a good 15 pips, right? For a good 15 pips is how much the trade actually continues for. So this is why I love using my moving averages. Now I decided to share this with you guys so that we can spread the value across the teams. So, you know, as I said, I think, I don't know if Kamaya is on this call. Kamaya has been using this.
Good morning.
Good morning. Wait, hang on. Just mute that. Good. So you can see here how we have that cross there. So for me now, if I'm looking for this sell to happen, I would more or less be looking for my moving averages to cross again. So I need my black line to cross my orange line to give me that indication that we're actually looking for that sell. All right. So that's something that I tend to look for, especially around my trend line. That's something that I really, really tend to look for. I should have that. I should have my black line, which is my 5. So my 5 moving average line crossing and going under my 9 moving average line. So you need to identify which is which on your based on the colors that you choose. So I should actually see a cross to the downside when it reached my trend line. If I don't see that, then I know that it's not actually ready for me. So you could see here that when it came down here, that actually I had a cross for the upside. So I actually knew without having to look at it that my trade was not ready as yet. So that's a good strategy for you guys to use. I will obviously post this recording on YouTube so that you guys can use it. Hopefully it was handy. But let me get some feedback in the chat box. If you guys could give me some feedback in the chat box on if you think if you think the moving averages was handy for you. Do you think that you can see yourself using the 2 moving averages cross? Paula says fantastic. Anybody else? is really, really good strategy, and it helps you in terms of, getting some more certainty and confirmation, right? So you're using the 5. Perfect, perfect, perfect. Okay, Andrew asked me to repeat the touches of the trine 9. So just to be clear, so you get the 2 touches. So the first 2 touches of the trine 9 activates the trine 9. The third confirms the trine 9, and you look for the break of the trine 9 with the 4th and 5th touch. All right, guys. So hopefully today was a little useful. I gave you a little something that you could use to help with your trading in terms of your entries. Try to use it. Give me as much feedback as possible. That would be perfect. And thank you, Paula. And thanks to everyone that joined in today for this call. I look forward to seeing you guys on Thursday, same time at 6 a.m. Guys, have an amazing day, and may the pits be with you.